Welcome back, everybody, to Trading with Anderson Will. This is going to be the market prep for the week of March 2nd, and it's going to be the first week of March. So, congrats to everyone for surviving the super choppy February that we had. Hopefully, we're in store for some better price action here. So, the first thing to kind of get through is kind of do a recap of last week, which was pretty crazy of an end to the week. So, last week of NVIDIA's earnings, and I know that last week we talked about the expectations for how the market was going to react, and that likely NVIDIA needed to really blow earnings out of the water for us to actually have a gap up, and that's kind of exactly what happened. So earnings was really good. We had NVIDIA actually guide up Q1 revenue to around 78 billion, which is not something super crazy out of this world. So what we ended up seeing is that sell the news reaction, and the neutral game plan that we had essentially ended up playing out. So from there, the US confirmed that there was major combat operations in Iran Friday night, which actually struck multiple sites in Tehran. And so this is really crazy because the Strait of Hormuz, which actually accounts for about over 13 million barrels of oil per day, is a clear choke point kind of area. And so if that strait gets disrupted, then oil probably spikes really crazy in terms of prices. And then there'll be a huge kind of economic issue that could potentially form there. And so in terms of what we will likely see happen early this upcoming week is probably some type of soft gap down. But I think like many historical geopolitical sell-offs, it usually only has some type of fear for like 1 or 2 sessions. And then what ends up happening is that dip gets bought and we start kind of reversing and going in an uptrend from there. So if anything, play it cautiously, of course, but I think if there is a dip, it's probably buyable. But of course, with this gap down, we're probably going to see another heavy rotation into defensive names, and that's going to be like Raytheon, LMT, and then of course it's going to be oil like Chevron and Exxon. But with that in mind, let's jump straight into it and take a quick look at SPY and kind of see what's actually happening here. So the most important thing that we have obviously been talking about for the past couple months now is that we've been into this huge chop zone and the EMAs aren't really respected anymore. So in some sense, when I'm looking at in a higher time frame analysis, I actually turn off the exponential moving averages and then I only look at the levels that price is actually trading within. So originally the SPY level that I had for the top and bottom of the range was towards the lows at around 650 for SPY, but I've moved it up to around the 675 spot because that's where we've had some very positive reactions off of. And so I'm inclined to believe this is that higher low that has now been printed. And so it's very clear now, especially when we have the EMAs turned off, since price was just slicing in and through out of those levels, so not really respecting it, so it's not really relevant in terms of data. Now what we can see here is either we get a clean break to the downside or a clean break to the upside, and then that's where we can start really putting our foot on the gas pedal in terms of putting on size and then seeing setups start to fire in every sector. So until we see that happen, we probably don't really get any true follow through until that actually happens. And so what you want to look for in terms of a confirmation of this is a daily close above or below this chop range. And then when you turn on the EMAs again, what you want to see happen is detachment off the EMAs. So what I mean by that is we want to see price do something like this, where we get a breakout and then it actually just kind of like cruises slightly above the exponential moving averages. And then once we actually get any true dips, it gets really respected. Like the EMAs are actual inflection points where price reverses and then uses it as a springboard to continue higher in the same trend. So that's what we want to see as a confirmation of a break past the range. And remember, this can be either to the downside or the upside here. So you got to be very open-minded in terms of where this next trend could be coming. But of course, in the past couple of weeks, I know that I've viewed this a little bit more bearishly because of how weak tech has been. And the view perspective is that the rotation into industrials and financials likely gets exhausted. And so if that money doesn't rotate back into tech, then that's where we probably get a breakdown on SPY, since we've already seen that kind of already happen on tech, right? Because of software stocks and their weakness. But I'm inclined to believe now that because of all the bad news that we've had recently, for example, the really bad GDP print, and then potentially this global tensions with Iran, if these dips get bought up, then I'm leaning a lot more bullish because it shows you that at these lower levels, even bad news now isn't really causing an intense sell-off. And the reason why I'm saying this is because when you look at Bitcoin here, right? The news was kind of like Friday morning. So Saturday, this candle here, we actually did get a pretty big dip on Bitcoin. But then as you'll see, the actual dip was absorbed pretty quickly. And then obviously now it's selling off, but we've actually seen a quick absorption of that. And so towards the bottoms of these levels, when you see bad news doesn't really affect price anymore, it doesn't spook sellers anymore, that's in some type of inclination that could be a potential bottom, obviously. So not really saying that this is the bottom, but definitely think it's possible and there are potential signs of a potential rotation. Obviously, this week is going to be playing a very pivotal point in terms of potentially causing that rotation back on to risk on. And so what I mean by that is that we do have a lot of economic data, but also earnings upcoming this week too. So the most important one this week is going to be Broadcom, because we want to see if there is actually continued demand in AI chips, and specifically in Broadcom's their own custom silicon pipeline. So if we see Broadcom just blow earnings out of the water, then that shows you that the demand isn't just isolated to NVIDIA, but rather it's an actual whole market, but also huge demand across multiple sectors, instead of just what NVIDIA is kind of claiming and the market is trying to say, hey, just trust what NVIDIA is saying. So if Broadcom does really well, then that supports that thesis. Other than that, we do have a lot of economic data. For example, on Monday, we have ISM manufacturing PMI. Wednesday, we have the non-farm employment change as well as services PMI. Thursday, we have unemployment claims. And then finally, Friday is going to be the most important. As usual, at the end of the week, it's retail sales, the unemployment rate, and then finally, the non-farm employment change. So essentially, that's the jobs report. So this is really important, especially since we got a hot PPI and then the GDP print. So we want to make sure that there's comfortable room for potential another rate cut, or at least the economy isn't like too weak and recession fears could potentially come back. So if this data prints out pretty well this week, we could actually get a pretty good start to the month of March. I will reference again back to the second year of the presidential cycle and the seasonality part. Even if you don't believe in the seasonality, it's still kind of important to kind of have them in the back of your head that March tends to be a little bit better. It's one of the better months for the market. And so we hopefully will be able to get that with the catalyst being economic data. And who knows, maybe even Broadcom actually does really, really well for their earnings. But other than that, let's jump straight into it. The first name on the list is going to be Starbucks. So the first thing I want to point out to you, ignore this little chart here really quickly, is that there is about almost a 360, almost a full year out consolidation, kind of like a stage 2 base that has been developing since March of 2025 all the way to now. And I think this really aligns well with the headwinds that the company has been facing in terms of their business model, because if you actually look at all their earnings reports, they've actually haven't really been doing well. Like revenue has been improving, but their profitability really has been struggling. And so that's kind of why we actually saw this huge dip towards the beginning of 2025 because of demand and also just strict competition with other companies that are also consumer and in the space. And so I think it's really fitting that now prices starting to tighten and volatility is starting to contract and kind of decline. So what you want to notice here is that after the highest volume quarter print off of the most recent earnings report, volume has died down significantly. And then now I want you to look at this volume contraction pattern that usually what we see happen is we usually see a big contraction on the first one, which is this here off of earnings, then the second rebound, which is off the 21 EMA. And finally now, what I project is it kind of feels like this is now the third potential contraction. And it's going to likely be off maybe just the daily 9 and even off just like the $97 price point. So this looks eerily similar. Obviously, this is technical analysis can be speculative sometimes, but this looks really good in terms of potentially having a continuation and kind of having that sentiment change for the stock too, especially since it's been consolidating for almost a year now. So if anything, in terms of the trigger point for taking this trade, I want to see a break above 100.55. The reason why I don't want to use the most recent pivot is because it's already super close to the rejection spot made from February 12th. So I might as well just play it safe and look for a clean break past that. because then that's actually kind of like an actual true break over the downtrend line. And then we can use the pivot from earnings as the first target at around 104 to 105. That'll be the first target. And then obviously in terms of setting the stop loss and everything, I think what we could do is do it as a failure to close above that $100 mental point, and then you target the 104 first. RR is around 2.65, and then from there you can target for the mental number of around 110, and then etc. So I like to think that because this has been consolidating, having that quote unquote stage 2 breakout for the past almost a year now, it's likely going to move a lot more than just a simple mere 4%, right? Especially since the ADR is 2.74%. You could see a pretty crazy move. This pivot high here at around 114 is definitely not that far off if you really think about it. We do have a lot of consumer reports this week, actually, like Costco and Target. So these all things could be a potential catalyst for Starbucks to catch some momentum too. So that's the plan. I'm looking to take the March 20th 100 calls off this trigger, and I think it has a good potential of actually triggering this upcoming week. Awesome. So the next name is going to be Honeywell here, and I really like this name because obviously their most recent earnings was just really, really good in terms of demand, but also I really like this consolidation that we're getting now. Obviously, I talked about this a few weeks back too, and that didn't really trigger, but now what we're seeing here is even tighter consolidation, and I like that the volume picked up here as we hammered off the daily 9 and closed near the highs on Friday. So what I really want to look for is a daily close above basically Friday's high, because we haven't had a close above this level yet. So honestly, we could move this horizontal line up a little bit to maybe somewhere here, and the trigger in terms of an EOD entry at least could be a confirmation of this breakout by having a daily close above it, and then that's where you enter off of. But I think this name is really, really good. The only frustrating and tricky part about this name is that the ADR is only 1.8%. So all in all, it might not move that much, and so it's a little risky in terms of trying to catch this one on a full pure breakout. So if anything, want to buy time, maybe even April contracts if I'm being honest with you, since earnings is April 23rd. At least that OPEX contract doesn't cover the earnings, so it's not a huge IV spike. So maybe March and maybe even layering on April contracts if this name can actually really start to get some momentum going. And then there's going to be two more names. The first is going to be FCX. This is a really good name that has been working on a very, very nice breakout. A lot of people have actually turned off dividends for this. And what you'll see here is that it's on the weekly time frame. It's on a very, very nice extension move here, but we're going to leave that on. And I think that in terms of catching this name here, the weekly is a little bit extended, but this is the highest weekly close yet. So on high volume too. So I think this move is definitely not done here. The biggest thing is to look for a close above that 69.53 spot, because that was where price rejected really heavily on a HVQ candle. So that's what I'm really looking for. I think any dips to the daily 9 and kind of like a retest of the 66 spot is 100% buyable. What actually ended up happening on the Thursday is that you see a really crazy UNR actually happen, where there's immediate aggressive buy reaction off this 15-minute candle here off that spot, and then price just kind of actually is using that spot as a springboard. So that's exactly what you want to see, right? So if we get anything something close to like that again, that's definitely something to keep an eye on in terms of buying the dip essentially. Finally, the last name is going to be Doc N. So we've traded this name before in the past, where it was this stage 2 breakout that was made from May of 2022. So it's like almost 4-year consolidation. We've pulled back now. We just had earnings actually. They did really good for earnings, and then we see a really nice reaction off that stage 2 breakout spot at around 52 on Friday. So it's actually nestled right next to the daily 50 EMA too. So what I really want to see is it's kind of tricky, right? Because we can use one of two spots. We can use that stage 2 breakout spot at 52 as the potential entry if we get back to that spot, and it would just be a failure to close above that spot as your stop loss. We actually see a really nice reaction off of Friday open, which is really, really cool. But then we're really close to the daily 50 EMA, and I think that might be even a better spot in terms of using it as a pivot, right? This here, if we get a nice little up candle, what we want to see is a positive reaction off the daily 50. We use that spot as a support, and then that can be the potential higher low level as the fresh new entry. So if price fails to close above the daily 50, then we use that as a stop. And then obviously if price really kind of tanks and gets down even lower, we can try another entry at around 52 in terms of finding the bottom here. But really nice idea in terms of catching this retest. I think it's definitely possible here, especially if we get some momentum coming back into large cap tech, especially with Broadcom reporting earnings this week. That ultimately wraps it up for this week. Thanks so much for reviewing my watch list and market prep for this upcoming week. Trade well, be patient, and I'll catch you guys in the next one.